Selling your digital services from the UK to clients all over the world, I mean, it's an incredible way to grow your business, but let's be honest, the VAT rules can be a complete minefield. If you get it wrong, you could be facing some seriously unexpected tax bills. That's exactly why we've brought in the experts from My Tax Accountant to put together this guide for 2026, making sure your global dreams don't get tangled up in tax tape. So, picture this. You've just done it. You've landed that absolute dream client based in Berlin. This is the big one, the project that could change everything for you. But just as you're getting ready to draft up that first invoice, this little thought pops into your head. Wait a minute. What on earth do I do about VAT? This is that classic hidden trap that can turn a massive win into a really costly headache. And this isn't just some made-up scenario. Let's talk about Chloe. She's a fantastic web designer based in London. She wins this huge project with a company in the EU, the champagne is popped, and then the email lands from their finance team. Hi, Chloe, could you let us know your VAT situation? And just like that, the party's over. This happens to countless UK freelancers and businesses every single day. So, what does she need to know?
Okay, so what's the very first thing that Chloe and you need to get your head around? Well, it all boils down to one single core principle, the place of supply rule. Seriously, if you can grasp this one concept, you are basically halfway to solving the entire puzzle. It is the foundation that everything else is built on.
Now, the place of supply rule sounds a bit technical, but its core idea is actually pretty straightforward. All it does is answer one simple question. Which country gets to charge the tax? Is it the UK, where you are, or is it your client's country? The answer completely flips how you handle your invoice, and it all comes down to one thing. Is your customer a business, or are they just a regular person?
And here's where the road splits in two. For B2B, that's business-to-business sales, the place of supply is where your customer is. This is great news for you because it means you don't charge any UK VAT. They handle it on their end using something called a reverse charge. Think of it like them paying the taxman on your behalf. But for B2C, selling to a consumer, it's the complete opposite. The place of supply is right here in the UK. That means you have to charge the standard 20% UK VAT. It's the exact same service, but two totally different tax outcomes.
Okay, so that's the theory, but theory doesn't get the invoices paid, right? So let's get practical and build an actual action plan. These are the exact steps you need to follow, whether your client is just across the channel, in the EU, or on the other side of the world. And here's a quick pro tip, because this is where a lot of people go wrong. To treat that sale as B2B, you need to have some proof they're actually a business. A VAT number is the gold standard. But what if they're a small business and don't have one? Well, you can accept other proof, like a link to their professional website or official company documents. The crucial thing to remember is that the responsibility to check is on you. If you're in any doubt, you have to play it safe and treat it as a B2C sale. So what if Chloe's client in Berlin wasn't a business at all, but just an individual who wanted a personal website? In the past, this was an administrative nightmare. She might have had to register for VAT in Germany. But thankfully, there's a much better way now, the EU's One-Stop Shop Scheme, or OSS. It is a massive time saver. You just register in one single EU country. Ireland's a really popular choice for UK folks. Then you charge the local VAT rate for whatever country your customer is in. And finally, you just file one single quarterly return to cover all your sales across the entire EU. It just simplifies so much paperwork. Right, let's talk about the magic number that every single business owner in the UK needs to have burned into their brain, £90,000. As of now, that is the UK's VAT registration threshold. If your taxable turnover hits £90,000 in any rolling 12-month period, you have to register for VAT. It's not optional. But notice I stress that word, taxable. That one word is absolutely key. And this quote is why that word is so important. This is a huge relief for anyone with international business clients. Remember those B2B services we talked about, where the place of supply is outside the UK? Well, guess what? They do not count towards that $90,000 threshold. This means Chloe could earn, say, $100,000 from her EU business clients and still not have to register for UK VAT, as long as her actual UK sales stay under the limit. Understanding this is a massive strategic advantage. Okay, now for something that you absolutely need to have on your radar for 2026. And stay with me here because this one might really surprise you, especially if you sell things like live online workshops or coaching sessions. There was a change in EU law highlighted in the recent 2025 budget discussions that has created a brand new complication.
Yeah, this was a bit of a shock to the system for a lot of online creators and coaches. As of the start of 2025, the EU completely changed its rules for how live B2C online events are taxed. The problem is, the UK hasn't updated its own rules to match yet, and that mismatch is creating a really tricky situation for anyone selling these kinds of services from the UK to customers in the EU. Let me show you what I mean, because this is a huge shift. Before 2025, if a yoga teacher in the UK had a student join their online class from Ireland, they just charge UK VAT. Simple. But now, the EU's rule says the place of supply is where the customer is, so that teacher has to charge Irish VAT. But here's the kicker. UK law still says the place of supply is in the UK. So as things stand right now, you are legally required to charge both UK VAT and Irish VAT on the exact same sale. It's created a very real and very unfair risk of double taxation.
Okay, I know that was a lot to take in, especially that last point about double taxation. So let's just press pause for a second and simplify everything. Let's recap the absolute key things you need to walk away with today.
This is a great one to grab a quick screenshot of. Think of it as your cheat sheet. The standard UK VAT rate is 20%. The registration threshold is £90,000 of taxable turnover. If you're selling digital services to consumers in the EU, use the OSS scheme. If you're selling B2B services anywhere in the world, it's outside the scope of UK VAT. And that big red flag for 2026, if you're running live online events for EU customers, you've got to watch out for that double taxation risk.
So really, it all comes down to this one crucial question. Expanding your business globally is incredibly exciting, but being unprepared for the VAT implications isn't just a minor issue, it can cost you serious money. So you have to ask yourself, are my plans for 2026 truly VAT-proof?
Now, before we wrap this up, just a very important point. We've covered the core principles today, but every single business is different. Your specific circumstances might have details and complexities that we just couldn't cover here. So please, don't rely on this information alone to make your financial decisions.
To make absolutely sure that you're compliant and perfectly set up for global success, the best next step is to talk to an expert. The team at My Tax Accountant, who helped us develop this whole guide, specialize in exactly this stuff. They can give you tailored advice for your business so you can go global the right way. You can give them a call on 0208-570-8531, or you can drop them an email at info@mytaxaccountant.co.uk. Thanks so much for watching.